I'm Corbett Wall with DV Auction, here with your feeder flash for Thursday, June the 2nd, brought to you in part by Livestock Risk Services. We've been talking here for the better part of this past year how valuable these livestock risk protection policies are. They're purchased off the board, which is always elevated, and then settled off your cash index is what cattle are really bringing. And that's an advantage for those that take those out. But especially if your background in cattle, turning out on summer grass or something like that, you can't hardly afford not to be protected. It's a good way to hedge your investment there. But if you would like more information about this, one of the pros in selling these policies is Livestock Risk Services. Go to livestockriskservices.com. Cattle bounce. Not so much with the grains, but the cattle did bounce on Wednesday, and a nice bounce too. Of course, all your commodity markets, for the most part, all your ag markets were down hard on Tuesday to open the week after the Memorial Day holiday. But whenever corn especially was down hard again on Tuesday, following being down hard on Monday, losing over 45 cents in just the 2 days to start this week, that gave cattle a chance to go up. And man, did the feeder cattle go up over $4.50 higher on your August contract for your Wednesday session on feeder cattle. Now that's a big deal there. But the algorithms kind of took over, and you know how that goes. You know, those traders that are local there around Chicago are all set up with high-speed internet and computer programs with algorithms in there. And once one of those commodities starts going a little bit, then it just progressively starts going more as those algorithms try to cash in on the movement. Well, so we had some push on there with corn starting out lower there on the session, and with the feeder cattle taking off, and then the fed cattle took off, and we saw big nice gains on your CME cattle, both live cattle and feeder cattle. We hate to admit that that's the way it happens, but that's just the way it happens. It's not that we saw a lot of investors or fund managers all of a sudden seeing the fundamentals that we're short on cattle, and especially for our out front months, we need to start getting on them because they're going to get higher. No. That makes too much sense. It's just squiggly lines on the graph. Whenever some trading starts to take place, then it just progressively goes on. It's just the inertia that pushes those commodities further than really what they had a right to go. But they're all doing it, and we're actually just kind of glad that your cattle don't do the after hours trading now, because you know, they could probably go up the extended limits and then back down before we got a chance to get going the next morning again. But why was corn such a loser, and why were you know, all your grains? Of course, beans came back a little bit, but Kansas City hard red winter wheat down hard. Well, because it's wet. And we've got our planting done for the most part on corn. Corn planting progress, as reported on Tuesday by National Ag Statistics Service, was 86% complete as of this past weekend. 86% complete. That's pretty darn good. The average of the last 5 years was just 87. So we've caught up with that. The previous week it was 72%, but this modern equipment, if they get some days where they can work, they can just flat do it. But it's made big strides there. So now, whenever we get big moisture in the Midwest and in your Corn Belt, instead of kind of being a downer because we can't get the fields planted, now it's a well, I mean a downer as far as cattle, but now it's a downer or bearish for corn whenever we get the big rains there, because we feel like we're going to make a better crop. So that's as clear as mud, but you guys know what I'm talking about. Your emergence, or that's popped out of the ground, sitting at 61%. That's not terrible. Your average of your last 5 years is 68%, but it's been so wet, sun's not shining when it's raining, so it's hard to get that emergence and your wetness too. But made a lot of progress in a week. It was only 39% and then moved all the way up to 61%. But, getting a lot of moisture in the northern plains. North Dakota was so terribly dry, and now it's suddenly wet, especially on the eastern side where a lot of that farming is done up there. But there's still some spots in South Dakota that are really dry, but for the most part in your farming areas, it's wet. Iowa's in good shape. Eastern Corn Belt's in good shape. I talked to my friends in Missouri, and they don't have time to visit because they're busy building an ark. And things are just pretty darn good as far as the moisture is up there. Of course, the southern plains, the western side of the southern plains, still popcorn fart dry. But the eastern side of the southern plains, where a lot of that hard red winter wheat is planted that hasn't been grazed off or already plowed up or cut into a little dab of hay or whatever they could get, that's pulling your Kansas City hard red winter wheat down hard. Another thing that's been talked about is Russia's take on Ukraine's grain exports. We're not really expecting Putin to allow Ukraine's grain to leave the country, but he's at least talking about it. But he's kind of holding it, dangling out there as a carrot. He's wanting these other countries to pull back on the sanctions that they put on him, trying to get him to stop that war. But not really expecting that. But the wet country and the promise of a good crop is what's so bearish for your corn and giving a big boost to your cattle markets. But I want to give you the latest talk about the Cattle Price Discovery and Transparency Act. Haven't heard a lot about that lately. Well, the latest gotten, and that's fresh news mid part of this week, that Chuck Grassley, according to AgriPulse, has said that he expects both the Cattle Price Discovery and Transparency Act and the Meat and Poultry Special Investigators Bill to be marked up. That's what they call it whenever they bring it up to the committee. It'll be marked up to the committee and easily passed in the Senate Ag Committee. Now see, we've just recently seen the Meat and Poultry Special Investigators Bill pulled up and passed through your House Ag Committee. They did not bring up Cattle Price Discovery and Transparency Act yet. Doesn't mean they won't do that. The reason that they expected to be pulled up in the Senate Ag Committee and it wasn't pulled up in the House Ag Committee largely is due to the performance at the House Ag Committee hearing, which was kind of a flop for those that were in support of the bill, but they really didn't know whether or not they were for the bill. And then the outstanding performance by NCBA's Don Schiefelbein, their new president, that's totally against it, and he was well prepared and had a great performance there for his side of the story. But we're expecting that to go through, and Chuck Grassley said that he expects that to happen this month, in June. So if indeed it does happen in June here, we're going to be in pretty good shape. Of course, they've got some recesses around 4th of July and then another in August, but we have some good opportunity to get a big push behind that before we have the actual votes in both the House and the Senate, if we can get that bill pulled up and marked through the House Ag Committee sometime this summer. But I'm going to keep you guys up to date on that. But let's talk about your board. On Wednesday, June live cattle futures, as I said, were up big, up 227, closing at 132.80. August up 252 at 132.90. Your back months were all up too. Not so much on your farthest out traded months, up just a quarter, but getting up closer, they were up more than that, up 175. August feeder cattle up 460 at 169.72. Be a good opportunity to look at some of those LRPs now, guys. September feeder cattle futures up 427, sitting at 172.40. Wow, that sounds awful good, guys. You think it won't get that high? I'm kind of there with you. Makes you want to go out and get one of those LRPs and just lock them in. Talk about your back months on feeder cattle. They were up 265, and that was your farthest out, to closer being up 427. So big gains on feeder cattle futures. Why? Corn was down 22 1/4 bushel cent, but down over 45 cents in the last 2 sessions, like I told you. Ending their regular trading at 7.31 1/4. Beans up 7 cents at 16.90 1/4. But Kansas City hard red winter wheat down 37 1/4 cents a bushel, down well over $1 in the last 2 sessions. Hard red winter wheat. Ending regular trading at Kansas City wheat at 11.28 1/4. Your fat cattle trade kind of got started already, and it wasn't just basis jumping, but because of the basis jumpers that we had on Tuesday, we did see that price well established in the southern plains of 135 on Wednesday, but they didn't get near the basis that the basis jumpers got. But that's kind of the way this industry works. It just goes against each other all the time. But Colorado's information was confidential. Evidently, we're not getting any interest from a third packer there. Iowa had 500 head confirmed on Wednesday from 138 to 140, which is a buck or two lower. Dress sales 219 to 222, and that'd be a buck or two lower. Nebraska 4,000 head confirmed on Wednesday. 138 was the only price. That'd be 2 to 3 lower in the northern plains up there, and then dress sales from 222 to 222 1/2. Kansas 7,000 head confirmed out of Kansas on Wednesday, mostly at 135. Had one deal at 136. Texas 2,400 head, and they've already traded 8,000 for the week, all at 135. Box beef cutout values were kind of mixed on Wednesday. Choice cuts were down 12 cents at 267.42. Selects were up 26 cents at 248.91. Slaughter running at a good pace for a holiday week. Can't really compare it to last week, but compared to the same week a year ago, which was a Memorial Day week, 254,000 so far this week, and that's 49,000 head more than the same holiday week last week. So going along at a pretty good clip for a holiday shortened week. Let's talk about your feeder cattle market. Your real-time index on DV auction late in the day on Wednesday, sitting at 155.24, down 4 cents. Not that the market was off, it's just that our big sales were in the southern plains, especially OKC West. And they're just not bringing as much there because of freight, and because of the big drivers in the market are your farmer feeders in the Midwest. And our market was really higher, like it has been probably for the last week or so, and mostly on cattle weighing over 800 pounds. And you'd think, well, the corn is backed up a little bit, and maybe it gets underneath the cost of gain levels, and maybe you should buy those lighter cattle, and they should be making more advance than the heavier cattle weighing 800 to 1,000 pounds. Well, not really. They're actually kind of filling gaps right now. We got a lot of cattle on feed right now that are going to be ready here within the next 2 or 3 months. That's going to leave a lot of empty pens. And then a lot of our cattle weighing 600 to 750 in the last month or 6 weeks have been going to pasture. Some are grazing. They've turned those cattle out as bigger stockers than what they typically do. So it kind of left a little gap in here. They don't want to run out of cattle. And of course your corporates and those outfits that have sweetheart deals, they can't run out of cattle. They got to have a constant flow to fill their contracts and their commitments to these packers. So they're short some cattle weighing in that 800 to 1,000 pound range there, and a lot of those. But look at OKC West, El Reno, Oklahoma, 7,100 head. Really the only big sale we've seen this week so far, other than Russell, Iowa's special. But OKC West, feeder steers weighing over 800 pounds, $4 to $6 higher. Very significant right there. Lighter steers and all weights of heifers mostly steady. That's more confirmation that it's mostly farmer feeders and northern feedlots that are driving the market, because they just like steers so much better than they do heifers. And let's give an outstanding quote out of OKC West and El Reno on Wednesday. 86 head of 951 pound steers in El Reno, Oklahoma, bring 149 1/4. Big quote there. How about winter livestock in Dodge City, Kansas? 1,700 head there in Dodge City. Feeder cattle there, steers and heifers, are $3 to $8 higher, and it was mostly on those weighing from 850 up to 950 pounds. That's just where most of them landed. And they had a stick out quote that impressed me at Dodge City: 54 head, 966 pound steers bring 147. Normally we see those big prices on those heavy cattle in the north, but we just haven't had that many heavy cattle in the southern plains, and they're filling a gap like what I told you a while ago. How about some other individual quotes? South Central Regional Stockyards in Vienna, Missouri. My friends, the Patton family there, 68 head of steer calves, weighed 429 at 215.50. Nice quote there. How about Russell County Stockyards, Russell Springs, Kentucky. 68 head, 820 pound steers standing in the rings in Russell Springs, Kentucky at 159.75. Chris Byerly, friend of mine that works with the guys in Joplin Regional Stockyards there, and he's a cow sale agent there. He told me that the biggest quote that I should have for today's session ought to be the one that he gave me out of Joplin Regional Stockyards, and it was at their cow sale. At the cow sale in Joplin, they had one single newborn baby full-blood Bramer calf. She was a heifer. He said she probably didn't weigh 60 pounds, had a wet navel, brings $635 per head. And I said, you got to be shitting me. And he promised me that he wasn't. I'm not going to say that he wouldn't lie, but I don't think he was lying about that. But the best quote that I got anywhere on Wednesday, and your National Beef Wire top quote for the day, come out of Huss Livestock Market in Kearney, Nebraska. 54 head, 638 pound stocker type steers bring 192.10. That's your feeder flash for Thursday.